You're welcome to today's class at New Idea Consult Academy. At New Idea Consult Academy, we offer accounting classes for students in the Faculty of Management and Social Science students, and those who are offering accounting courses for related courses. For those in law and public administration or other departments that haven't have a course to do with accounting course for the semester, here is a lecture on how to calculate depreciation. Depreciation is one of the courses we calculate in management accounting and financial accounting. And what is actually depreciation? So we're going to cover those items in this class and how to calculate the net book value of the assets. We're going to explain all these items and give you the formulas and the strategies and the methods of calculating it. Now let us look at the meaning of net book value. Net book value is the residual value of an asset of a company. It represents the net worth of the company property after deducting the accumulated depreciation value of the asset for the period. And the net book value simply means the NBV, or the residual value of the assets for a particular period of the company. And how do we calculate the NBV? Listen carefully. We're going to give you an example and calculate it in this question and in this class. First of all, let us look at the meaning of depreciation. Depreciation represents the value of wear and tear of an asset of a company for a particular period. If a company acquired an asset, a vehicle, or a property of a company, and that asset are being used to generate income in the business, that property undergoes what is called depreciation. But it is in this class we want to let you know that the landed property does not depreciate. So therefore we don't depreciate landed property in accounting because landed property appreciates. Now let us look at those items that can go under depreciation. One of the examples is the building, the furniture and fittings, the office tables, the office equipment like television, and also the computer used in offices, the plant and machineries. These are the items that can undergo depreciation in accounting. I want to mention those items again. We say that those items that can undergo depreciation in accounting include, there is the office building, plant and machinery, like the listers, the generators, and also the office computers, and the furniture and fittings, the tables, and other items used in the office that are tangible in nature, used in running the business to generate more income. Those items are not for resale in the business, or rather the company or the organization use it to generate other income. And because they are used to generate other income, they are tangible in nature, you can see them, you can make use of them, and it's called what? The property or the fixed asset. And under those fixed assets, we say there's an item that does not go under depreciation because it appreciates the value. That one is a landed property. Landed property does not go through depreciation because the land you acquire now, after 5 years or 3 years, the value keep on expanding and increasing. So it doesn't go on depreciation. But we're looking at those items that can go under depreciation, as we said before. Now let us look at the definition of what? Depreciation again. We say that the depreciation is the value of the asset consumed for its usage in business. The value of the asset consumed for its usage in business. The value consumed in the business is known as depreciation. Because if you buy a vehicle, you use to run a business for after 5 years, you cannot say that vehicle how much you bought it when you at the first year you bought the vehicle. Although actually this time around, under this kind of galloping inflation we are experiencing in the economy now, the case may be different. But let us look at the depreciation not in inflation period, but the depreciation in the normal economy. Now let us look at the method of calculating depreciations. 1, we have straight line method. 2, we have reducing balance method. 3, we have amortization method. And there are many methods of calculating depreciation. But in this class, we are just mentioning the three. And this three is necessary for you to acquire the knowledge and the understanding on how to apply them. Now let us look at the purpose of what? Calculating depreciation. We said that the purpose of calculating depreciation is to ascertain or determine the net book value of an asset, and for planning purpose. You calculate the depreciation of an asset for you to enable you know the net book value. That is, what is the remaining value of the asset that can be useful in the business, in running the business for some years ahead. And also we equally calculate the depreciation to know the value of the depreciation consumed in running the business. Then also we equally calculate depreciation to enable you know what is the planning they're going to adopt to enable you replace those assets when it is fully consumed in the business. So they can replace the asset. That is for planning purpose. And how to control the depreciation of the asset. They have to control the asset of the business and not depreciation. So this is the purpose of what? Calculating depreciation in a business. Now let us look at how to calculate the net book value. We're going to bring one question. The question is very, very important for those students who are writing exam for second year in accounting, and those who are running accounting courses as a related or the courses that their faculty require them to do. This lecture is important to you. Now let us take this question under how to calculate the net book value of the assets. Question is, Pricewood Capital Limited acquired asset for 100,000 naira as at January 1st, 2011. Required. Calculate the net book value of the assets as at 31st December 2013. Using 10,000 naira as the annual depreciation charge. Now, you are required to calculate the net book value of this asset of the company or Pricewood Capital Limited, who acquired an asset worth of 100,000 naira as at January 1st, 2011. And you are required to calculate the NBV. The NBV represents the net book value or the residual value of the business, of the asset of the business. Now let us look at how to calculate it. Now the formula simply means that they have already given you the annual depreciation charge as 10,000 naira annual depreciation charge for the year. So because you have been given, you now find out the cost of the assets. The cost of the asset is 100,000 naira. Then the annual depreciation charge is 10,000 naira. Then the asset have been used, is acquired by January 1st, 2011, and you have to calculate the depreciation, the accumulated depreciation of the asset for as at 31st December 2013. You discover the company used the asset, as this question refers, for 3 years, which means 10,000 naira for each year as a depreciation charge times the 3 years will give you 30,000 naira. Now, how to find out the net book value? You say net book value NBV equals to cost price less accumulated depreciation charge, where you don't know the net book value, which can be represented by X, and you have already known the cost price, which is 100,000 naira. And in this 100,000 naira, the cost price, then you have also calculated the depreciation, the accumulated depreciation, which is 30,000 naira for the 3 years. Each year is 10,000 multiplied by 3 years will give you 30,000 naira. Then the net book value equals to cost price less accumulated depreciation, which will give you 70,000 naira. That is 100,000 less 30,000 will give you 70,000 naira. Then the net book value of the asset, that is NBV, equals to 70,000. That is it. So the students, if you have any question, please forward your question to us through our email christopherjames1@gmail.com. Forward your mail to us at christopherjames1@gmail.com, or contact us on our phone 08035869524, or reach us at New Idea Consult Academy. Thank you.